Today, we're talking about a bombshell $9.4 billion deal. Groundbreaking development in the mortgage industry today that's set to reshape the landscape in 2025. I'm talking about the Monumental merger between Rocket Mortgage and Mr. Cooper. I'm going to pull up an ad. I'm going to tell you some pros, some cons, what I think this might mean for the mortgage industry going forward. I'm going to try to give an unbiased take, regardless of my feelings about Rocket Mortgage. And trust me, there are some pros, there are some cons. Stay till the end, where I'm going to talk about what I think this means for mortgage going forward and how we operate within the mortgage industry. So let's pull up the Housing Wire article here. Rocket companies to acquire Mr. Cooper in bombshell $9.4 billion deal. This is right on the heels of the last acquisition that Rocket made that wasn't that long ago. They bought Redfin for $1.7 billion just a few weeks ago. So let's walk and talk through this. This is breaking news, and there's going to be a lot of people that, talk about what this means. Does this mean that, mortgage rates are headed down and one of the largest mortgage companies in the country is buying up this data, which, trust me, this is a data play as much as it is a play for some of the other parts of Mr. Cooper. Mr. Cooper is the largest servicer in the country. I've had hundreds and hundreds of clients that I've closed loans for at multiple different lenders that ultimately got their servicing transferred to Mr. Cooper. I'll talk a little bit about Mr. Cooper and some of the feedback I've got from clients on them. I've got personal loans serviced by Mr. Cooper, and how Rocket is going to use this to further grow. They're going to be in control of 1 in 6 mortgages in the US. That's huge. Rocket is building a monster, for better or for worse. That's what's going on. So that's part of what this says. Up here, if deal closes, Rocket will service 1 in 6 mortgages in America. They've already got a lot of this ironed out, where it's going to be a stock for stock purchase, and it's set to close in Q4 of 2025. It sounds highly likely that it is going to close. So when it says if deal closes, this isn't like negotiations. This is like they've got a deal put together. They've just got to get this thing across the finish line. So Rocket Companies is buying Mr. Cooper, America's largest mortgage servicer, in a market-shattering deal that could reshape the mortgage industry for years to come. Detroit-based fintech, that's Rocket Companies, which, Rocket Mortgage is underneath that Rocket Companies brand, while also in the midst of this Redfin purchase for $1.7 billion, is paying an equity value of $9.4 billion in stock. That's Monday, March 31st, 2025, where all this stuff was released. With this acquisition, Rocket will have a combined servicing book of $2.1 trillion, about 10 million mortgage clients they'd be servicing. That's 1 in every 6. 1 in every 6 mortgages, the servicer would be Rocket Mortgage. And when you service a loan, most of you know that's who you're paying your payment to. Your bill comes and it says Mr. Cooper. You make your payments to them. They pay your tax and insurance if you have an escrow account, and they handle the servicing. Now, what a lot of people maybe don't understand is that this is a way, servicing rights in a world where we're probably going to see a lot of refinance in the next 3 to 5 years as mortgage rates comes down. Servicing is the best way to already have somebody in your network, have their information in your system, and then you can market to them endlessly, right? You can send them mailers. You can call them on the phone. Hey, this is Johnny over there at Mr. Cooper, just reaching out to you. You got a 7.75% mortgage. I'd like to offer you a 6.75. We can lower your payment by $265 a month. And it's just, it's a smart way to be able to get in front of these people and potentially get some future refinance. So servicing is a critical pillar of home ownership. This is Varun Krishna, Rocket CEO. With the right data and AI infrastructure, we'll deliver the right products at the right time. This is something that I'll tell you more about later. I know how Rocket operates. I've heard from people who have worked on the inside. I've seen the data on all the refinance they've done, and some of them were criminal. Some of it seemed very predatory, but I'm going to give them the benefit of the doubt. I'm going to talk about the pros and the cons. You can do good, like Varun is claiming here, but you can also do bad. if you're putting people in products that don't financially benefit them in the long term, but it benefits you as a company in the short term, bad business, right? That's how we build lifelong relationships, by proactively unlocking benefits. So I'll interject here. You're going to have access to, and you're going to be able to market to a lot of mortgage clients, 10 million to be exact, like we talked about in this article. What I am afraid of, and I was going to say like what I don't want to see, I have no choice in this matter, like we're going to see it, is them using this to go out and quite honestly be predatory. If somebody has 15,000 in credit card debt and you talk them into a cash out refinance to go from 3.25 to 6.75, you bake in $20,000 worth of costs to even get them to that 6.75, and they're only paying off $15,000 in credit card debt, and you call that a debt consolidation, you call that beneficial to them when it's adding 500, 1,000, 1,500 to their 30-year mortgage payment, really hurting them in the long term. That to me is sickening. And I'm telling you, not being biased here, they do it. The data showed it. They were targeting low credit score, and a lot of times people that didn't have a lot of financial education, and were refinancing those clients multiple times. And I know for a fact that when you're going 2, 3, 4% higher on your first mortgage rate, not all of those made sense. There was alternative products that could have helped them, or there was just advising and counseling to pay off the credit card debt and leave that mortgage alone. Leave the one good thing you've got in your financial life alone. So anyway, I can get passionate and talk about that for an hour. I won't. I'll just continue to talk about this, and I'm going to share with you some thoughts on pros and cons. Under the deal terms, the CEO of Mr. Cooper, Jay Bray, will be the president and CEO of Rocket Mortgage. That's how they're going to structure it. The transaction is expected to generate $100 million in additional pre-tax revenue from higher recapture rates and attaching its title, closing, and appraisal services to Mr. Cooper's existing originations. Mr. Cooper did $23 billion in originations last year. Everything I've heard, originations wasn't their strong suit. They were really all in on servicing. If you look at my YouTube video that I made on Mr. Cooper, again, I wasn't throwing shade or anything. I was just saying a lot of my clients are having their servicing transferred to Mr. Cooper. Here's what it means. It's just a matter of collecting your payment and applying it. It's really not anything hard. I got a lot of comments, and really like comments are the best indicator of what people are feeling and how a company's operating. People were furious. They were furious about just the lack of service they were getting from Mr. Cooper. And so even on the simple stuff like servicing, they were dropping the ball. I can't imagine, and I haven't heard anything, honestly, good, bad, or indifferent about their originations, but I don't know how good they were at, originations and, the purchase side. This is probably mainly refinance, I would guess. I bet you that Mr. Cooper is 70% plus refinance when they talk about originations, because they're there. They're there in the client's living room. The bill comes in the mail. They're in front of people to present, propose, and close refinance deals. Rocket projects $400 million in pre-tax cost savings from streamlining operations. Yeah, you put together two companies. Rocket does this really well. Mr. Cooper does this really well. We're going to, combine forces, and there's going to be some efficiencies drawn from that. I agree with that, and I'm sure that's going to happen. To help finance the transaction, Rocket's going to get themselves a little $5 billion bridge loan from their friends over at JP Morgan Chase, expected to close in the fourth quarter of 2025. In a social media post, Krishna said that he's been texting with Bray for some time. So these CEOs just text back and forth. Hey man, let's put our forces together. Let's combine forces. They're both really tech based, in my opinion. I know that when I got my servicing transferred to Mr. Cooper on personal loans that I had, I thought the tech was phenomenal. I thought that the interface, the user experience, and some of that stuff on Mr. Cooper's site was great. When I made that video, I didn't realize all the dissatisfaction people had for Mr. Cooper. But anyhow, they're combining forces, and I'll close on this article with, We knew we could do something extraordinary together, and the combination of Rocket and Mr. Cooper would be greater than the sum of its parts. So in a perfect world, the pros, two big companies that are, in their words, out to revolutionize home ownership and all that stuff, are going to, create streamline efficiency to help homeowners, not just on the servicing side, but on the origination side. So putting that aside, let's talk about this merger. Let's talk about pros and cons. And some of it will be a repeat from this article. The pros to the merger are going to be, like I talked about, enhanced efficiency and cost savings. Whenever you put two big companies together that lean on technology, they're going to be able to streamline operations and whatnot. So there's that. Another pro potentially is improved customer retention. Now you ask about who this is a pro for. It's a pro for the companies, right? Rocket has call centers, and Rocket is really, really good. Say what you will about Rocket, they're really good about customer recapture rate. Salespeople who are absolute, it's a nice way to put this. Sometimes you have to be a savage with follow-up to be able to recapture business. 83% customer recapture rate, which is significantly higher than the industry average. And then you've got Mr. Cooper, humongous servicing portfolio. They're just going to, they're going to increase business, no doubt, whether I like it or not. And I don't like it, to be completely honest, because I don't think that they necessarily are good with advising. And they certainly don't have high-level advisors like you'd get if you talk to an independent mortgage broker. But they're going to have customer retention, and they're going to have customer retention on this big 10 million client database. No doubt that's a model for growth. And so the third potential pro is a comprehensive homeownership experience. And that's what everybody's going for. We're using technology, and we're creating a client experience that leverages technology and human experience and advice to make it accessible to everybody and easy. Now, where they're going to fall short, in my opinion, is the expert advice, because you just can't do this at scale in a call center with people that are brand new to the industry. You need local experts. That's why the independent mortgage model, where the wholesale lenders operate on their own, they support brokers, and then brokers go out and grow their businesses based on referrals, based on doing a great job, based on being good, right? That's how brokers grow market share, or they're good at what they do, right? So end-to-end homeownership journey is the final pro, right? They're integrating home search, financing, servicing, all under one roof, trying to simplify the process for consumers. Sometimes technology isn't simple. So we'll see, right? What are tomorrow's future homeowners wanting in a home buying experience? Are they wanting a lot of technology tools, or do they want somebody who's been through it to pick up the phone and talk to them and say, hey, it's Matt Gouget with You Mortgage. I can tell you what I suggest you do based on everything you've told me, because I've done this a few thousand times. I know a thing or two because I've seen a thing or two. Okay, enough about that. Let's get to cons. Significant consolidation should also raise concerns. And so let's talk about three concerns. One, market competition. With the combined entity of these two new companies servicing 1 in 6 mortgages, there's apprehension about reduced competition in the mortgage market, which could impact consumer choices and innovation. Well, I see both sides of that coin as well, because, sure, they're going to be a monster. And so they already spend a ton on marketing. They already are in a ton of households via their technology and some of their other apps, Rocket Money and all that. Now they're going to have this huge book of 10 million clients. Maybe it spurs other giants like the UWMs of the world, which, by the way, UWM is still the #1 lender in the country above Rocket. Maybe they get bigger, stronger, and better, which, of course, is what they're going to do. That's just what they do. And yeah, so market competition is a concern, a potential con. Integration challenges is a second potential con. merging two massive organizations with distinct cultures and systems is not easy. It could disrupt services and affect consumer experience during the transition period. People have already told me Mr. Cooper sucks. Their customer service sucks. And so we'll see. We'll see how they do that. And again, not throwing shade. I had good things to say when I made my first video, and people just through the comments told me that their experiences weren't good. All right. Another potential con is regulatory scrutiny. It's going to attract attention from regulators. Rocket's already been sued. They were trying to partner with, I think it was Keller. They're paying agents to funnel the business to Rocket Mortgage. That was a big no-no. So in the spirit of consumer protection, there's going to be eyes on a company this large, and there's going to be delays maybe in finalizing the deal because they're trying to look out like, is this, going to affect consumers? Are consumers that have their mortgages serviced by Mr. Cooper that now combined with Rocket, to dial these people 75 times until they beat them into submission on refinancing a deal that doesn't make sense for them? Is that going to be good for the consumers? So finally, what does this mean for the mortgage landscape in 2025? One, for consumers, it could lead to a more streamlined services and potential better rates. More competition could lead to better rates because other lenders are going to, get better, more streamlined, and lower their rates to compete. However, when you've got a couple big companies that are controlling, a vast majority of the market, reduce competition, could limit options for borrowers. I don't believe that because as a broker, I know I've got 40 different lenders I can broker to. I've got, UWM and AFR, PM and Windsor Mortgage and Kind Lending. I've got unlimited places to place a loan based on what's best for the consumer. So I don't see that happening. For the industry, this consolidation may prompt other mortgage companies to explore mergers, strategic alliances. As the mortgage industry continues to see mergers and acquisitions, you're going to see big winners and, quite honestly, big losers, right? Smaller companies are going to have a harder time competing against some of these giants who are already giant by themselves. They start combining forces with other giants, and it really makes it tough for the smaller companies to compete. Finally, innovation, increased resources, unlimited pocketbook, right? To spend on technology, to spend on other things. You put big companies like this together, that this combined entity might invest more in technology and innovation. This could enhance the mortgage application and servicing experience. We hope that it does. With less competition, they could get complacent, but they're not. UWM is going to go out there and continue to grow and get better. Rocket is going to do what they can to compete. There's going to be, as mortgage originations increase over the next few years, as rates come down, there's going to be a lot of companies integrating technology, doing really cool stuff for the consumer. And so I, for one, am excited about it. Not necessarily a fan of Rocket, but I'm just giving it to you straight on, things that I think will, for the industry as a whole, be positive. All right. In closing, this merger marks a pivotal moment. Like this, we'll see how it all plays out. I want to hear your feedback, right? I want to hear what you think about it, what experience you've had with Rocket, what experience you've had with Mr. Cooper, what you see for the future. As we're having mergers and acquisitions, is that a sign? Hey, mortgage rates are headed down in the future. If these big companies are spending billions of dollars acquiring another company for in some words, like the rights to these clients' data and being in front of these clients for refinance, does that mean that they see something that we haven't seen yet as far as mortgage rates go? Is it a step forward for the industry, or is a few huge mortgage companies versus a lot of small ones a bad thing? I want to hear what you have to say. So leave your comments down below, share, subscribe, do the things you'll want to do on YouTube. If you want to connect with me and my team and you've made it 20 plus minutes on this video, go to greatmortgagebroker.com. Me and my team would be happy to help. Thanks for watching. Look forward to seeing how this shakes out. Look forward to hearing your comments and your reactions below. Talk to you soon. Bye-bye.